Next, fourth entry is for installment received. So what is the entry? Bank account data to installment seller account 1/1/2007. So as I told, date is also very important. So they have purchased the asset on 1/1/2000. Installment purchaser account data to sales account to interest suspense account 39,930. Whatever the amount you have carried down in the previous year, that has to be brought down to the current year. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the session 5 of Unit 3 of the subject Financial Accounting 1, and this is for first sem BCom student. So your Unit 3 is all about accounting for installment system. So we have discussed lot of the problem relating to installment system. So let us quickly recall what we have discussed in a previous session. So in a previous session, we had solved a problem relating to journal entries in the books of installment seller. So what are the entries that has to be recorded in the books of installment seller? So the first one is for selling of assets. So what is the entry? Installment purchaser account data to asset account to interest suspense account. And your second entry is for what? Receiving the down payment. So bank account data to installment purchaser account. And a third entry is for interest due. So what is the entry? Interest suspense account data to interest account. Next, fourth entry is for installment received. So what is the entry? Bank account data to installment seller account. And your fifth entry you don't have for depreciation charge. And your fifth entry is for transfer of interest to profit and loss account. So what is the entry? Profit and loss account data to interest account. So these are the entries that comes under installment seller account. So these are the journal entries that has to be recorded in the books of installment seller. Now we shall go through a problem so that you can clearly understand. So today we shall solve a problem relating to ledger accounts in the books of installment seller. Now go through the problem here. Sham company purchased a machine under installment system. Now who is Sham company? So they are installment purchaser. So Sham company is installment purchaser because they have purchased a machine under installment system on 1/1/2007. So as I told, date is also very important. So they have purchased the asset on 1/1/2007 from Kavan company. Now who is Kavan company? Installment seller. The terms of payment were, let us see what are the terms of payment. Here they have not given the cash price, but they have given how they have made the payment. So down payment rupees 37,500. Now what is the down payment? 37,500 and balance in 3 equal annual installment of rupees 39,930. Now what is this 39,930? They have directly given it's a installment. It is nothing but it is inclusive of interest. It is principal plus interest at the end of 31st December every year. Kavan company charge interest as 10% per annum. What is rate of interest on installment? That is 10% per annum, which is included in the above installment. So they have directly told. So in this installment amount, interest is included. It is nothing but installment which is inclusive of interest. Determine cash price. So as I told, they have not given the cash price of the asset. We have to calculate the cash price and prepare necessary ledger accounts in the books of installment seller. Now who is the installment seller here? That is Kavan company. So we have to prepare entries in the books of Kavan company. Clear? So this is a ledger accounts we have to prepare. Hope you are clear with the problem. So installment purchaser is Sham company, installment seller is Kavan company. So here installment purchaser have purchased a machine from Kavan company. Now they have not given the cash price of the asset, but they have given the down payment, that is 35,700. Next they have given the installment amount which is inclusive of interest. So how much? 39,930. Next what they have given rate of interest is 10%. They have not given the depreciation because we are going to prepare entries in the books of installment seller. So here the installment seller is not having the asset, so no need to calculate the depreciation on machine. Next, what they have told, we have to calculate the cash price of the asset and we have to prepare necessary ledger accounts. Now go through the solution here. So first we have to prepare or we have to calculate the cash price of the asset. So this is calculation of cash price of the asset. So hope you are familiar with calculation of cash price. So what you have to do, we have to go from last installment. So here installment is or the payment is made in what? 3 equal installment, right? So we have to start from third installment. So third installment. So each installment they are going to pay. They have told that they are going to pay 39,930. So third installment is how much? 39,930 less interest. So as I told, it is inclusive of interest. So what is the percentage of interest they have told? That is 10%. So this 39,930. So this 39,930 is inclusive of interest, that is 100 plus 10, that is 110, right? So for 110, so the installment is 39,930, then rate of interest is how much? 10%. So for 10%, how much? So how to calculate? Cross multiply 39,930 into 10 divided by 110. Clear? So this is how you are going to calculate the interest. So why you are dividing it with 110? Because it is inclusive of interest. So interest is equal to 39,930 into 10 divided by 100. So you'll get 3,630. Now deduct this. So when you deduct, so you'll get 36,300. Now add second installment. So I have told you installment remains same. How much? 39,930. So installment remains same. Add second installment 39,930. So how much you'll get? 76,230. Now less interest. So how to calculate interest? You have to calculate interest on this amount. That is 76,230 into 10 divided by 110. So you'll get 6,930 as interest. That is second year interest. Now you'll get, when you deduct, you'll get 69,300. Add first year installment remains same, 39,930. So you'll get how much? 1,09,230. So upon this amount you have to calculate the interest. Less interest 1,09,230 into 10 divided by 110. So you'll get 9,930 as what? That is first year interest. Now so when you deduct, so I'll get 99,300, that is the amount payable. Add down payment. So what is a down payment? So they have told 35,700 is a down payment. So 35,700, so I'll get 1,35,000 is the cash price. Now what you have to do? You have to come with third installment first. So third installment, less interest. Add second installment, less interest. Add first installment, less interest. You will get total amount payable. Add down payment, so you will get cash price of the asset. So this is how you are going to calculate the cash price of the asset. So here no need to calculate the depreciation. As I told, we are going to prepare entries in the books of installment seller. Now directly go through the ledger accounts. Ledger accounts in the books of installment seller. Now who is the installment seller? Is Kavan Company. Now first account to be prepared is installment purchaser's account. Who is the installment purchaser? Sham Company. So we have to prepare entries in the books of or ledger account of Sham Company first. That is installment purchaser. Now what is a journal entry that has to be recorded in the books of installment seller? That is first entry is for selling of assets. So what is the entry? Installment purchaser account data to sales account to interest suspense account. Right? So why it is sales account? Because under installment system we are going to sell the asset. Right? So we are here the ownership as well as possession of goods directly transfers from seller to purchaser. So it's nothing but selling of asset. So your entry will be installment purchaser account data to sales account to interest suspense account. Now what you are going to record? That is on 1/1/2007. to sales account. So what is the cash price of the asset? 1,35,000. So I'll record 1,35,000. Next, on the same date, that is on 01/01/2007, to interest suspense account. So you have to add all the year interest. Now what is the third year interest? That is 3,630 plus what is second year interest? That is 6,930 plus what is first year interest? That is 9,930. So if you add all these interest, so this amount has to be transferred to interest suspense account, that is 20,490. So 20,490 has to be transferred to interest suspense account. So what is the first entry? That is for sale of asset. So your entry will be installment purchaser account data to sales account to interest suspense account. So in sales, you will write the cash price of the asset. In interest suspense account, you will add all the interest of 3 years and record. That is 20,490. So this is your first entry. Next is for making or receiving the down payment. So what is the entry? Bank account data to installment purchaser account. So bank account data to installment purchaser account. So how do you record? On 1107 by bank account, that is for receiving the down payment. So what is the down payment they have received? That is 35,700. So record this 35,700. Next, third entry is for what? Interest due. So we will not have this installment purchaser here. Next, fourth entry is for receiving the installment amount. Right? So what is the entry? Bank account data to installment purchaser account. That is 31/12/07, end of the year. So by bank account, this is the first installment received. So what is the first installment received? If you go through this table, so what is the first installment? That is 39,930. So 39,930. Next is for transfer of interest to profit and loss account. So here installment purchaser does not come. So we are done with the first year entry. So the first one is for what? Selling of the asset. So selling of the asset, your entry will be installment purchaser account data to sales account to interest suspense account. So we have already recorded. Next, for receiving the down payment, bank account data to installment purchaser account. Next, third entry is for interest due. You will not have here. Next, fourth entry is for installment received. Bank account data to installment purchaser account. Now we are done with this. That is first year. So add both the side. So when you add, you will get a balancing figure. So balancing figure of how much? 79,860. So this amount has to be carried down to the next year. For the next year, 1108, to balance brought down. Whatever the amount you have carried down here, that is 79,860, bring down that balance. Now, from the second year, we'll start the entry from interest due. So whereas interest due does not come here, next installment received. So what is the entry? That is bank account data to installment purchaser account. That is end of the second year, 31/12/08 by bank account. This is the second installment received. So what is the amount? Second installment, that is 39,930. Now record this amount. Next, no other entry, balance both the side. So in the debit side, it is 79,860. And whereas in credit side, you'll get a balancing figure of 39,930. Now that balance has to be carried down for the next year. In the beginning of next year, 1108, to balance brought down. How much? 39,930. Whatever the amount you have carried down in the previous year, that has to be brought down to the current year, 39,930. Now, you have to make the third installment. So what is the entry? So you are going to receive the third installment. So bank account data to hire purchaser account. So how do you record? By bank account. What is the third installment? That is 39,930. So record that amount, total both the side, and it will tally, because they have directly told that the payment will be made in the form of 3 equal installment. Now we are done with installment purchaser account. Now we shall directly go through next account, that is interest suspense account. So I have told you under installment purchase system, we are having a new account, that is interest suspense account. Now what are the first or in the first year, what are the entries to be recorded? So the first entry is for what? That is for selling of assets. So what is the entry? Installment purchaser account data, to sales account, to interest suspense account. So how do you record here? That is by installment purchaser account. Now who is the installment purchaser here? That is on 1107 by Sham company account. This is for that is for selling of asset. Selling of asset. So what is the entry? Installment purchaser account data, to sales account, to interest suspense account. So how do you record here? By Sham company account or by installment purchaser account. Now what is the interest suspense? As I told, in interest suspense we are going to record all the amount, all the total of all years interest. So total of all years interest is 20,490. Next, in the first year, for interest due, what is the entry? Interest suspense account data, to interest account. So in the debit side, you will write 31st/12/07 to interest account. So what is first year interest? So first year interest is how much? 9,930. So record that amount. So we are done with this. Nowhere we are going to record interest suspense account. So balance both the side and the balancing figure has to be carried down. So when you balance, you'll get 20,490 both the side and you'll get a balancing figure of 10,560, and that amount has to be carried down for the next year. That is 31st/12/07 to balance carried down 10,560. Now come to the next year, that is 08. It is 2008, 1108 by balance brought down 10,560. Now in the second year, since you are not going to record entry for selling of asset, directly go through interest due. So what is the entry? Interest suspense account data, to interest account. 31st/12/08 to interest account. So what is second year interest? That is 6,930. So record that amount, 6,930. Now balance both the sides. So in your credit side, you'll get 10,560, whereas in debit side, you'll get a balancing figure of 3,630. So this amount has to be carried down. 31st/12/08 to balance carried down. How much? 3,630. Now come to the next year, that is 1109 by balance brought down. How much? 3,630. Now in the third year, what is the interest? That is for interest due. What is the entry? Interest suspense account data, to interest account. So write 31st/12/09 to interest account. So what is the interest in the third year? That is 3,630. So record that amount. So in your debit side, it is 3,630 and in your credit side, it is 3,630. So this is a simple problem which might ask for 10 marks, where you have to prepare installment purchaser account as well as interest suspense account. So here only 2 accounts has to be prepared. So depending upon the problem, so whether it is for 3 years, you have to prepare 3 years account, or if it is for 4 years, you have to prepare 4 years account. It depends upon the number of installment in which they are paid. So my dear students, this is a problem relating to installment purchase system. Hope you have understood the session. See you all in my next session. Till then, take care. Thank you.